Here's the hard truth. Most property investors in 2025 are stuck. They're either scared to make a move or still following the outdated advice from 10 years ago. You'll hear the same recycled lines. Wait for the dip, always buy land, negative gearing is the way. But the markets change. And if you're serious about building real wealth through property, you need new thinking, not louder opinions. These are 7 moves smart investors are already making. No gimmicks, just sharp frameworks to help you move faster, scale smarter, and leave 99% of buyers behind. So let's get into it. Let's say you save $150,000. You could dump it all into one 1 million property or split it into 500,000 investments that grow side by side. One ties you into a single suburb. The other gives you more flexibility, exposure, and 2 shots in capital growth. Even with more depth, dual asset strategies often outperform single property plays, especially when the markets are carefully chosen. Think one infrastructure boom suburb, one tight rental pressure in regional areas. But this isn't about pushing your limits. It's about knowing your risk profile and playing inside it. The golden rule? Don't stretch so far that a 1% rate rise put you at risk of selling the property. Smart leverage amplifies growth. Aggressive debt amplifies pain. Most investors waste years trying to pick the perfect entry point and miss years of growth in the process. Waiting feels safer, but often the cost of waiting outweighs the price of entry, even if it means buying with a 10% deposit and paying NMI. That fee could be the price of early access to compounding growth. Let's compare. Person A waits 5 years to save a bigger deposit. Person B buys now and rides 5 years of growth. In most cycles, timing the market rushes timing the market. And by the way, NMI protects the lender, not you. But if it gets you in sooner and safely, it's a tool worth using. I remember when we were starting, we just had the 10% deposit, and we know it's the right time. So we didn't hesitate to make a deposit of 10%, and we just factored in the LMI. And looking back, that's one of the best investments decisions we've made. If you're still building your portfolio, every dollar of cash flow matters. Interest-only loans aren't lazy. They're strategic. Lower holding cost means you can buy sooner, hold longer, and weather downturns. The goal isn't to stay interest-only forever. It's to give yourself runway. Cash flow is flexibility, and flexibility is what keeps investors in the game long enough to win. More runway equals more resilience. Your existing property has probably grown in value, and that growth is equity. You don't need to sell to access it. Refinancing or using equity loans lets you scale without waiting years to save for another deposit. So if you're equity rich but cash flow poor, this is your unlock. Just use it wisely. Equity equals value minus debt. It's your fuel for momentum. If your strategy depends on a tax refund, that's not a strategy. Negative gearing should be a byproduct, not a plan. Focus on assets that can hold their own, or better yet, deliver positive cash flow. Because when rates rise or policies shift, you want a property that survives on performance, not on politics. Positive cash flow is equals freedom. It's not house versus unit, it's cookie cutter versus unique. A rare, tightly held unit near a lifestyle hub can outperform a mass built house in a growth-less suburb. Focus on scarcity, local demand, and limited future supply. Unique plus in demand plus limited supply equals growth. Rent vesting isn't a trend, it's freedom. You can live where you love and invest where the numbers work. That gives you lifestyle, capital growth potential, and better cash flow. Let someone else pay your mortgage while you build wealth behind the scenes. This is how smart investors play both sides. Most investors never grow past their first property. Why? They're stuck waiting. They overthink. Or they follow outdated advice that doesn't reflect today's market. If these 7 moves help shift your mindset, that's the point. You're not here for surface level tactics. You're here to build long-term sustainable wealth through strategy. And if you want more of this, please subscribe to our channel And if you have a suburb you want me to analyze or a scenario you want me to model, drop it in the comments. I read all of them. Again, this is Gilbert. See you next time.